billion. And so we are assuring our shareholders that we see ourselves even growing further this performance in the years to come. Total assets, look at that. Just when we were listing this bank in around 2007, we had a total assets of 83 billion. Shareholders, look at that. By now, 2023, your bank has grown to total assets of 671 billion. It means the bank that was listed in 2008 when you bought your shares, particularly the shareholders who came through the listing, that bank has grown eight times, 800% growth from the time you came into the bank that we are now dealing with today. It's incredible God's favor, incredible teamwork by the board, the management, and the staff. It's been a great journey. The customer deposits again also from just around 93 billion when we listed to over 452 billion book today. The loan book also similarly, we had a loan book of about 53 billion in 2008. The loan book has grown to over 374 billion currently, indeed a growing bank. We have had very good presence, Chairman, and thank you that when we were listing the bank, the critical challenge in 2008 was to raise additional capital, Chairman, for growth. And to be able to increase our presence, we needed to be more competitive, particularly in terms of technology, invest in more technology, invest in more presence. And incredible that today we have over 194 branches. We have been able to very, very wisely marry physical presence, brick and mortar branches, and also the digital presence. We have invested in the digital presence. But we also realized that Kenya still need a physical branch where they will need to go register for an account, see that there's a local bank in their neighborhood. After that, then transfer that account to digital banking. They will go open an account in a branch, say in the new Uguja branch, but then a week later, they will transfer all those transactions to their mobile banking. That's the nature of Kenyans, and that's how we are. You go to a town, you go to a place where people don't have a local co-bank branch, where they are not able to see a logo, a building with a co-bank branch, and you're telling to sell them to open an account. It's a very tough conversation. But the moment they have had an account with the bank, they have seen you are there, and they see a physical presence, then they are able then, after that, a week or two later or a month later, they are able then to migrate to digital platforms. So we opened two branches already actually this year, Mr. Chairman. We have opened Imara Mall and Ugunja, and in 2023 we opened, last year we opened Keno Makuyu, Hindi, Bamburi, Greenwood Mall, this is in Meru. We had Thika, Kwame Nkrumah, we had Matu, Kimama, and a third branch, Nakuru White House. Chairman, we have 5 million omni-channel customers, just doing the penetration in our internet and banking. 599, almost 600 ATMs and cash deposit machines. The cash deposit machines have become very popular, Mr. Chairman, particularly for our MSMEs, because they can now come and, after office hours, bring their cash, bring their bankings there, and we're able to receive that for them. Kopko Jirani agents now, the agency banking model is very popular for us, and we have over 17,000 agents out there. We have 21,000 diaspora banking customers. The SACCO front offices, who are also agents of the bank, and remember we started this partnership very many years back in terms of supporting SACCOs to have front offices, and today as we speak, we have over 484 SACCO front offices network. And so when you add the network of the bank plus the network of the SACCOs who own us and all these agents, you can see that we have an unparalleled network all over Kenya. This is combined with a 24-hour contact center, and we have a great team that is doing a great job there. And overall, then we have over 5,400 staff. And so, Chairman, I think I want to thank you and the board that even when some institutions have been retrenching and reducing numbers, if anything, we have added numbers. We have had cases to increase numbers, to recruit young people to come and man those outlets that we have opened. Chairman, it's incredible that with all those branches, 91% of our transactions are on alternative channels. It shows reflecting the high level of operational efficiency. If you look at our financials for the first quarter, we have highlighted that our cost-income ratio has dropped from 46% first quarter last year to 44% this year. So whereas other costs have gone up, whereas some costs have gone up, the overall cost structure has grown leaner because we are, of course, on the way we have continued to better leverage on our digital channels. It's incredible. When we started our Swallowing Eagle transformation with McKinsey in 2014, they were actually targeting 70% of our transactions being on alternative channels. And those were the days when you'd come to the COP House branch, or you come to any COP Bank branch in the morning, and you'll find customers queuing, waiting for the door to be open to come in. I think one of the visits that I'm doing now is almost every other day when I have a customer visiting me is to take them through COP House branch. And Chairman, I take a lot of pride in showing them that this is a branch with 300,000 customers, and there will be no queues in the branch. It's just looking very nice. And I commend all the teams in the bank for the great work that we have done to leverage on technology and improve that operational efficiency. Chairman, just to say that we are now, to tell our shareholders that we are now implementing our 2020 to 2024 5-year strategic plan. We are in the process now of reviewing the 2025 to 2029 strategic plan. And there has been 6 strategic objectives categorized in 6 broad categories that have been driven this phase of our growth. Number 1, there's been aggressive deepening of our dominance in the Kenyan market. Mr. Chairman, whereas we went to South Sudan and we are still looking at going to other economies within the region, we realized we had a very big competitive edge and our cooperative model to deepen presence in Kenya. That's why we are talking about the additional 8, additional 2, additional branches that we have opened. We realized that opening a Kawangwale 2 branch, opening our Githurai 2 branch, opening our Nakuru 3 branch like we have done, opening our Eldoret 4 branch like we have done, opening a 4th branch in Kisumu, we realized that these outlets, a couple of those outlets, additional outlets, are even making more money than subsidiaries of banks in countries out there. And so much as we are looking at having that regional presence and building on our presence in South Sudan, we are looking at Ethiopia, we are looking at DRC, we are looking at the other markets, we have seen that 80-20 rule will put more focus on increased deepening our dominance in the Kenyan market segment. And that has driven our growth well in this season. Number 2, and so with that, number 2, Mr. Chairman, is a primary provider of financial services to the cooperative movement in Kenya and the region. Cooperative Bank is the largest cooperative bank in Africa. The cooperative movement in Kenya is the largest in Africa, with over 22,000 cooperative societies and 15 million members. And Chairman, this again is a sector that has given us a name. This is a sector that started this bank, and we have not even scratched the surface in terms of the deeper penetration and the deeper integration that we can offer to this sector. And every time we are constantly challenging ourselves on what more we can do. What more we can do to deepen this sector, and particularly to even support the revival of some of these sectors, particularly in the agricultural sector. And towards the end of my presentation, Mr. Chairman, I'll even have a slide just to highlight some of this work that we are doing now to support the cooperative movement in a very special way, to make sure that that sector that contributed that 1 shilling to start this bank, not only do we make money as an institution and give money to our shareholders, but also we need to make sure that that sector remains vibrant ability of the cooperative model. Number 3, Chairman, is a customer experience that is seamless across all channels. I think that has been incredible. The digital transformation. As I said again, we've invested in a new core banking platform. It's one of the best core banking platform globally. The platform was rated number 1 by Gartner Analytics. And so we, in terms of our ICT capability and in terms of the platforms that we have, totally prepared to go to the next level in terms of serving our customers. I talked earlier about the operating efficiency driven by digitization, innovative products, efficient business models, and staff productivity. Staff productivity is very key in this bank. Every member of staff, before they leave December for holiday, before those who take leave, before 1st of January, Sambilech and the team in HR ensure that every staff has signed their performance targets for the coming year. And everything is driven on performance. Everything is driven on your productivity as an individual in terms of what you're doing to the larger performance of the group. And I think that structure has helped us, Chairman. And thank you through the staff board for holding us accountable in terms of, as a board, in terms of a high performance culture. And that has been entrenched in the system, in the bank. And we are proud, and every year we are able to build on that. Optimal enterprise list can comprise the dynamic environment. Again, I'm happy. As I said earlier, in the portal, I've seen shareholders, engage very nicely on the bit about risk management. And indeed, we have very critical functions right from the risk management under James Kaburu, our chief risk officer, Henry Kalanja on the compliance function, Joseph Gatuni on a bit of risk management from a side of internal audit. And also risk management from a credit perspective. We have really invested in capacity in making sure that we are adequately and optimally managing our risks across all the sectors. And of course, positive impact on the economy, society, and environment. We are very, very, very key to make sure that we are responsible corporate citizens. I've talked about the Swahili Ngigo transformation. The Swahili Ngigo transformation started in 2014. And in 2014, basically, is a year that the board of directors challenged itself, and we asked ourselves as a board, what is our good to great journey? We were still doing well, but we challenged ourselves, what more can we do to build on the great journey and the great transformation within the bank? And in 2014, I remember us, the board was very bold, and then we looked for a partner to come and challenge us on what are the things that we can build on for the journey ahead. And some of the key pillars have been sales force effectiveness. We saw that we had then these 7 million customers, but coming from a bank that was banking cooperatives, and as we were bringing new products into the bank, we became a product-centric bank. In the context of an average customer of CoBank would have not less than, say, 8 to 10 people from CoBank going to sell different products to them. And so we challenged ourselves in the context of saying, how do we train our sales team? How do we train our relationship managers so that we move from a product-centric bank to a customer-centric bank? And we have where a relationship manager goes to a customer to sell a basket of products, as opposed to having product owners or product managers in the bank, each going to the customer selling the same. And I think this has been a very key growth area, key strength on the bank, and we continue to leverage on it. Branch transformation and customer experience has been we have really taken time, spent a lot of money in transformation, our branch transformation. And that can also be explained by the 91% on customers and alternative channels. We created a shared services center under the director of operations in the head office under that structure, and we were able to release over 54 services that were being done at the branch level, and that's why we were able to open up that capability at the branch network, and that's why we have that ambience, within the network. We invested in data analytics. This was a very huge project. We spent over $5 million in the data, almost 500 million shillings then, in the data analytics capability. This is what we're able to ride in on our MCOP Cash platform, our digital banking platform. And today, Mr. Chairman, shareholders will be pleased to know that on an average month, we're able to do salary loans and salaries on our mobile banking platform of over 6 billion every month. And this has been a major revenue earner for the group in this season. MSME transformation, it's incredible. Moses Gitao and the team in MSMEs, we have done incredible penetration, and it's one area that now we are one of the leading banks, and certainly a top bank in support to the MSMEs. As you may have noted, we got the top award for Africa in MSME transformation, MSME support in the AFC World Bank Group Awards recently. That was in India. We were rated as the #1 bank in Africa in terms of penetration and support to the MSMEs. Cost management, Carlo and the team in finance have done a commendable job, Chairman, and that's why we are able to talk about that reduced cost-income ratio. NPL management and credit process reviews, we have really grown in this area, other than the team, and Mchangi and the team in credit management. And the various businesses have done extremely well And as I noted earlier, the shared services out of the branch transformation and that digital transformation has just been incredible in terms of where we are now. Yeah, so some of the key achievements out of that journey has been the e-credit focus. As I said earlier, now we have disbursed over 352 billion on the e-credit using the e-credit platform. This is averaging 6.3 billion per month, Mr. Chairman, and the book is good. There are check of loans, and again, 91% of our transactions are now on alternative channels. Only 9% of our customer transactions are at the branch. Only 9% of our customers are actually visiting the branch for their services. MSME transformation, I've talked about that. We've trained over 58,000 customers and onboarded various packages now. The new packages, the gold, the silver, and the bronze, the supply chain financing, the Government of Kenya credit guarantee scheme, and year to date, Mr. Chairman, we've disbursed over 18.6 billion to MSMEs. I've talked about the power of sales force effectiveness for the teams under CIBD, Lydia Rono and Fizen Marangu in cooperatives, and also MSMEs also, and William Dumia. It's incredible in terms of the power of penetrating and power of selling more customers to the various customers that we have on our database. Chairman, again, is very deliberate by the board. The board has has continued to invest in a strong cooperative movement division. Why? Again, I will say this: cooperative movement is the one that started this bank. That's why we have a name, Cooperative Bank. Cooperative Bank are the founders of this institution. And when they were starting this institution, they were starting an institution that will provide them with affordable financial services. And so even as we have grown as a bank and as we have diversified and done the universal banking model, we have taken time in every season to make sure that we are deepening our penetration to the cooperative movement that is the heart of the bank. So we have a Sacco banking department doing a great job. We have an agri-banking department doing a great job. We have transport, housing, and investment department. We have the COP bancassurance intermediary that falls there, like as I highlighted earlier. In Sacco banking, I've talked about the FOSAs, the 484 FOSAs that we have supported. And if you go to a FOSA office, it's actually a bank. And we have even supported them to offer services like credit cards, ATM services. There's so many services that SACCOs are able to offer now as banks, SACCO banks, and be able to penetrate the 15 million member in the cooperative movement. Again, we have done digital integrations with this with the cooperative movement. Yes, and we have already over 144 SACCOs are already offering SACCO link products across the network. 240 SACCOs terminated over 45 billion annually via Lipa na M-Pesa with Safaricom. We have loans. We disbursed over 18 billion in 2023 to the SACCOs to give those level of services as highlighted there. We have a lot of capacity building work we're doing in agri-cooperatives. I think in a very special way, I want to highlight, Chairman, to our shareholders, the rollout of the DSS platform, direct settlement system for coffee. Co-Bank was given by the government the opportunity, and as the only lender, as the only institution in this market, to roll out the direct settlement of coffee payments. And this has been a big gain for the farmers. Previously, we had the marketing agents holding, after the coffee is sold, the marketing agents would hold the money, forward it through the millers, forward it through other many intermediaries. But the system now, Chairman, is once coffee is sold, the money moves from the buyer's account, the buyers of the coffee account, to the grower's account. And we thank the government for giving us that opportunity even to manage that platform. And we have We have the Co-bank Soko, or digital banking. We have support to coffee farmers in Busia, and we are linking them to Livertex. We have support to rice farmers in Mwea and other schemes in Ahero and Kano. And I think we have all seen in the media that Co-bank has been supporting Nyandarua potato farmers and linking them with KFC and others, so that we don't need to have people importing potatoes for the French fries in the chips and French fries in the KFC supermarkets. Now outlets. They're able now to go to Nyandarua and pick those potatoes there. I've talked about the coffee sector support, the coffee dialect settlement system, the DSS. I think it's been a great gain. Potato sector support in conjunction with the national government and county government of Nyandarua. We are looking at we are using Nyandarua as a pilot circle, and once this works well, we'll be able to distribute this countrywide to all potato growing areas. I've talked about the support to the cotton sector in Busia. We're also doing that in Lamu. We are working very closely with the Ministry of Cooperatives on this in terms of reviving the cotton sector. And we see a lot of potential because the greeneries are there. They are now being revived, and we believe there's a lot that can happen in that space. The ministry and our CS, Waziri Simon Cherugui, is very keen on this sector, and we're also supporting him very closely with the PS, because the PS, Mr. Kiremi, on this sector. Dairy and lice sector, the value chains also, we are on that. We are doing leasing business for PSV cooperatives, and we are also supporting, particularly on the housing agenda, supporting cooperatives on that space of housing. We have liquid support to the small and medium circles, and again, as I said earlier, we have been with the COP online and MCOP Cash. We are able to support our circles, disburse funds to the members effectively. So the digital capabilities that are there within the bank, we are transporting that technology to the cooperatives, to the circles that are linked to the bank. I've talked about the consultancy services that we have given. We have 34 full-time consultants reporting under Nicholas Kamonye. Incredible work that we have done over the years in building capacity within the cooperative movement. Just look at that. In 2023 alone, Chairman, we did 153 advisory mandates. We did 143 trainings, workshops. We trained over 4,600 leaders within the cooperative movement. And Mr. Chairman, we were able to train over 200 cooperatives. We were able to do workshops and individual training for 2 or 3 cooperatives societies. Just incredible, the impact that team have on the building of capacity within the cooperative movement. Just a bit of a breakdown of some of that work that we did, areas of focus, as I highlighted earlier. Again, highlighting the bit about the capacity building within the agri-cooperatives, like I highlighted earlier. Support to circles on the bit on MSME training, and also support on leadership training. Because we know that we as good, everything less on leadership, Chairman, we are as good as the leadership that we are able to sustain, not only in Co-bank, but also across the various institutions within the cooperative movement. And so we've taken that challenge as Co-bank through the subsidiary to see how do we build capacity and make sure that we have leaders that leaders of today and tomorrow within the sector. Yes, I think those are some of the examples that I'm giving there in terms of the actually specific societies that we worked with. We went to, just going back there, we went to Luada Cotton Union, supporting them on how to revive that, the bit about the cotton. We went to United Circles on customer experience. We went to Coast Teachers Circles Association We went to Cosmopolitan Circle in Nakuru to offer that support in the areas highlighted there. Co-Bank Foundation Chairman, again, I thank the board. 10,300 students sponsored on this. Since we started this program, we have other major programs that we are running under the Co-Bank Foundation, but the school fees has been the major one. We have the Jajiri program, we have the empowerment of youth in transport sector, we have many programs we are running there. But the impact, I think the flagship has been the school fees program for needy children. And thank you, Chairman. Again, 2 students last year, top two students last year were from our program. Our ESG performance, very critical. These are critical areas we have invested in it. We have a ECG department in the bank created, reporting to Karo Karemi within finance and strategy. And we have been very, very, very critical to make sure that these climate issues, these issues that are coming now, I mean, we can see the weather now, we can see the things that we've been talking about. These are global challenge. These issues are here with us. And even as a bank, we have created a team. We have a committee in the board looking at ESG issues. We have a cross-functional management team and the functional unit within the bank focusing on issues to do with ESG. Mr. Chairman, overall, in terms of sustainability, it's good to highlight that in the 6 years that there has been the Sustainability Awards in Kenya, Chairman, we've been the overall winner in those 6 years. Co-Bank has been awarded the most sustainable bank in Kenya 4 times in the 6 years that this award has been there. And we can only thank you, our shareholders and our customers, for working with us on this journey. Again, some of the other awards. We got the SME Financial of the Year Africa in the Global SME Awards in India by the IFC for Africa, and also a mention on the Product Innovation of the Year. We thank God for those awards. A couple of other awards there, quite a good number. It's a winning team, it's good teamwork in the bank, and we can only thank God for the sustained performance. Chairman, in a nutshell, you did allude to these numbers, and I'll not take time on them, but just to see that the total assets have grown to 671 billion, the numbers, the financials that we are looking at today, total assets have grown by 10% to 6.1 billion. Net loan book has grown by 10.3% to 374 billion. Government securities, there was a growth there also to 189 billion. Total deposits also a growth of 7.3 to 456 billion. Borrowed funds, we have leveraged on our developmental partners to grow our balance sheet and to look for funds for long-term sustainability. And we have grown those funds to 7.3 billion, 40% growth. And look at that, Mr. Chairman, our shareholders' funds have grown to 113 billion from 107 billion last year. 5.5 is a good growth all through. Chairman, you did highlight this, that all the businesses, Chairman, in the group have contributed positively to the performance of the bank. Cooperative Bank, 29.6 billion. Cooperative Bank of South Sudan, 291 billion. Coop Trust Investment Services, 226 million. Coop Bank Insurance Intermediary, 877 million. Kingdom Securities, 13 million. Kingdom Bank Limited, 1 billion. Last year, this is a kid in the block, the new kid in the family, but Anthony Boro and the team have started on the land, and we commend Anthony for the great performance and the team there for the work they have done there. Co-Bank, and so Co-Bank and subsidiaries, we have a 32.1 billion associate share of profit. This is what we are getting from CIC out of our investment there, to give us the profit before tax of 3.4 billion for the year, Mr. Chairman. And again, as we have seen, even now for the first quarter 2024, we have a 9 billion profit, and so we believe that all things equal, Mr. Chairman, we should be able to stand before the shareholders again this time next year and report even a better performance than this one. Out of that, Chairman, in this meeting then, the Board of Directors has recommended a dividend of 1 shilling per share. It's good to know that the strategic and majority shareholder of the bank, Holding Cooperative Society chairman, will then receive a bullet payment of 5.6 billion to distribute. And again, chairman, like you said, there's a 1.50 cents for 1 shilling invested in the bank. This is an exemplary return for the cooperative movement and also our shareholders, all our other shareholders. In conclusion, Chairman, I just want to say we thank God for you. We thank God for the board of directors that has provided excellent leadership to the bank. Thank you very much for the unity of the election and standing commitment to the bank. You have led as well as a board. I thank you. I thank my colleagues in the management, all of them, each and every member of staff, the 5,400 staff of us. Each and every one of us, we have worked hard. And indeed, God has continued to bless the work of our hands. We thank God for his continued mercies and favor upon the Kingdom Bank. And he will surely reveal to us the hidden treasures even in this season. Long live the Kingdom Bank. Thank you, shareholders, for listening to me. Thank you. Thank you, Mr. Chairman. I will now call upon Mrs. Nancy Mohoya, the managing partner from Ernst & Young, our auditors, to present the key highlights of the audited 2023 accounts and present their audit opinion to the members. Welcome, Madam Nancy.
Thank you, Group MD and CEO. The Chairman, Mr. Murugu, the Vice Chairman, Mr. Malonza, Group MD and CEO, Dr. Muriuki, Directors present, dear shareholders, good morning. I'm here to report our independent report for the year ended 31st December 2023. Let me start with the opinion. We have audited the consolidated and separate financial statements of the Co-operative Bank of Kenya Limited and its subsidiaries set out on this document, which is also in your portal, pages 20 to 146, which comprise of the consolidated and separate financial position as at 31st December 2023, and the consolidated and separate profit and loss and other comprehensive income, as well as changes in equity and cash flows for the year then ended, and the notes to those consolidated and separate financial statements, including accounting policy information. In our opinion, shareholders, the financial statements present fairly, in all material respects, the financial position of the group and the bank as at 31st December 2023, and the consolidated and separate financial performance and cash flows for the year then ended in accordance with international financial reporting standards and the requirements of the Kenya Companies Act 2015. We conducted our audit in accordance with the international standards on auditing. Our responsibilities under those standards are described in the auditor's responsibility, and I will be reading that in a short while. We have remained independent of the group in accordance with the ethics standards requirements. We have fulfilled our ethical responsibilities in accordance with the International Ethics Standards Board of Accountants Code, and in accordance with other ethical requirements applicable to performing financial audits in Kenya. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Key audit matters. Shareholders, key audit matters are those that, in our professional judgment as your external auditors, were of most significance to our audit of the financial statements of the current period. These matters were addressed in the context of our audit of the financial statements as a whole. Shareholders, we have fulfilled the responsibilities described in the auditor's responsibility of these financial statements. Accordingly, our audit included the performance of procedures that we designed to respond to our assessment of the risk of the bank and the group. Shareholders, the results of our audit procedures, including the procedures performed to address the key audit matters that I'll be outlining shortly, provide the basis of our audit opinion on the accompanying financial statements. There were 3 key audit matters. The first one is on provisioning of loans and advances. The second one is on cessation of reporting in a hyperinflationary economy, that is South Sudan, as far as Co-operative Bank of South Sudan is concerned. And the last one is on impairment of the goodwill amount recognized in the books on acquisition of Kingdom Bank, formerly known as Jamii Bora. For each one of these matters, we did design our procedures to respond to our assessment of the risks contained in these matters. The expectations of International Financial Reporting Standard for provisioning of loans and advances, we confirmed that management has complied with IFRS 9. And after having taken our audit procedures, we have no concerns to report as far as provisioning of loans and advances is concerned. For the second one that I did mention, cessation of reporting of hyperinflationary economy, IAS 29 sets out guidelines on how that should be done. We designed and executed our audit procedures, and again, we have no concerns to report to you. The third one on goodwill, IAS 36, International Accounting Standard number 36, also outlines the expectation of reporting for impairment of goodwill. Again, we designed and executed our procedures, which we have outlined on the audit report, and we have no concerns. Let me now get to other information. The directors are responsible for the other information. The other information comprises the group information, the report of directors, and the directors' remuneration report as required by the Kenyan Companies Act 2015. In connection with our audit of the financial statements, our responsibility is to read the other information, and in so doing, consider whether that other information is materially inconsistent. If based on the basis of our work that we have performed, the other information obtained is, we conclude that there is material misstatement, we expected to report that fact. Shareholders, I'm pleased to report to you that we have nothing to report in regard to other information. The directors are also responsible for the preparation and fair presentation of the financial statements, and that is in accordance with International Financial Reporting Standards. In preparing those financial statements, the directors are responsible for assessing the ability of the bank and the group to continue as a going concern. The directors are also responsible for overseeing the group and the company's financial reporting processes. Our responsibilities as your auditors. Our objectives are to obtain a reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Shareholders, as part of an audit in accordance with international standards of auditing, we exercise professional judgment and maintain professional skepticism throughout the audit. We identify and assess risks of material misstatement of the financial statements, whether due to fraud or error. We also obtain an understanding of internal control environment relevant to the audit in order to design procedures that are appropriate in the circumstances. We do also evaluate the appropriateness of the accounting policies used and the reasonableness of the accounting estimates and related disclosures made by the directors. We do also conclude on the appropriateness and the use of the going concern assumption.